So I was going to speak to you about the opportunity that is social investment tax relief and how it may work for you as charities and social enterprises. Before I get started, could I just get a show of hands possibly of how many people have heard of social investment tax relief beforehand? It's quite a lot. Could I have a show of hands of how many of you believe you understand social investment tax relief? Less. And then maybe a final show of hands, how many of you are actively trying to use it right now? Okay, so there's a few there, but clearly there's a lot more work to do, and hopefully this session will provide an ability to help you understand this and know where to go more for information. So today, I hope this is the start of an ongoing discussion with Big Society Capital and others that we're helping work with use this relief. I'm going to go through the background and where the relief is currently now and a few of the technical details around it. Then I'm going to hand over to Whitney, who's going to take you through an example of how this is used in practice so you can get a sense of exactly what this relief could mean for you. So to take you back to why this relief exists in the first place, and this picks up on a lot of the points that the Minister and Nick mentioned previously, is that what we hear at Big Society Capital is that there is consistently a need from charities and social enterprises for long-term risk-taking capital. There is a big gap in the amount of capital that's provided, which us and other organisations are trying to address. The type of capital that they need is usually long-term loans, with a mixture often of debt and equity instruments. And what we also know from the research is that this need is forecast to increase. And so there is some statistics saying that this could be over £500 million by next year. It could be the need there, so there could be a real potential gap for this level of capital. What we also know is that the existing tax relief systems don't account for social investment very well. On one hand, you've got gift aid, which applies for donations for charitable organisations. On the other side, you have investment tax relief for small and medium-sized enterprises, which is the Enterprise Investment Scheme and Venture Capital Tax Relief. So there's a big gap in the middle there around social investment. If you want to put money into charity or social enterprise to invest and get a tax return, you miss out currently. So the tax relief was really developed as one way of levelling the playing field for social investment. Finally, it's important to note that individuals, and you will probably have better ideas about this than I do, but have a real interest in the organisations they support, real social motivations, and from what we've seen from research, a real interest in putting that money into social organisations through investment. However, we know that the key trigger for them to make an investment like this is tax relief. So that's why this tax relief coming in I think came into force in July this year, formally, is going to be such a big deal. So what does this mean for those who receive the capital, but also those who are putting it up there? For charities and social enterprises, as the Minister said, this could unlock, under research, nearly £500 million of capital over 5 years. It may help identify new investors, partners, who have a connection to your particular social issue you're working with. It may offer you better investment terms. So the way the tax relief works, it may enable investors to offer a lower required rate of return than they may otherwise be able to do without the tax relief. It may also provide products that charities and social enterprises are interested in. So a key part of this tax relief is focusing on simple, unsecured lending products. And so that might be quite interesting. Finally, if you don't want the simple products and you want something more complex, this tax relief offers that opportunity as well. And there's the ability to actually mix a portion of the unsecured lending products, possibly with something more secured, like mortgages. There's a few different options for charities and social enterprises why this might be interesting to look at. From the investor side, actually there's reasons why they should be interested in this as well. Obviously, there's a 30% tax relief, which is quite attractive and comparable to other tax reliefs out there. It provides them an opportunity to increase the support they're already giving to social causes they believe in, but actually can now commit more money to those. It looks and feels like other venture capital schemes out there. And in the context of venture capital tax relief changing and being unavailable for different types of investments, this social investment tax relief may look more attractive. It's also quite important because this is a new product for investors. Currently, under existing venture capital tax reliefs, they can't invest in sort of debt products. So I think this is really an opportunity that they might see as quite valuable to them. So a lot of reasons why we think this could be quite an interesting tax relief to explore further. I've highlighted a couple of ways this might be in practice useful to charities and social enterprises as well. Think about the deals that this might be useful for. As I mentioned, small, simple deals. So this tax relief currently has a low investment limit, but it's really targeted at small, medium-sized organisations who want simple, unsecured loans to finance their operations. That's the heart of this relief. That's where we want to see the most take-up from. In addition to that, there's a few other ways organisations might find it useful. Organisations taking out their first social investment might see this as a way to transition from pure grant making. Community groups that are looking to raise community share capital will be eligible under this to build the community projects. And also high growth organisations, so community interest companies that take that form but want to scale very quickly might use this as a way of taking out equity, and particularly those that actually are in certain sectors that are not covered by other tax reliefs at the moment. So health and social care, for instance, organisations in that space currently can't access any other mainstream tax relief to raise capital from, but they can under social investment tax relief. So that could be a few more opportunities there to look at. A quick note about, what is this and how do you understand if you're eligible and what you want to do as eligible. There are 3 questions to ask. Are you the right investee organisation? Is it the right type of investment? And is it the right type of investor? And to focus on the investee organisation, you've really got to ask yourself a couple of questions. Do you have the right legal status? And Treasury, in looking at this relief, tried to be quite tight around the organisations which qualify for this relief, and limited that to registered charities, community benefit societies, and community interest companies. It also has a size limit, which 500 employees and less than £50 million of assets, is a limit, but actually is higher than is under existing other venture capital tax relief schemes. And finally, are you undertaking the right type of activities that qualify for this relief? And there are some exclusions around there, around electricity generation, property development purely for financial gain, personal lending. But actually, there's a lot more activities allowed within this than there is under normal venture capital tax relief schemes. Then you ask a question about the investment. Can it be shares or unsecured debt that meets certain criteria that is kind of the more risky type of debt than a simple secured loan might be? And another key point to note here is it's the size. That currently, under the direct form of this tax relief, that we're allowing only around £290,000 of investment into an organisation will be able to get tax relief. And there's currently some consultations ongoing about that at the moment. The final question is investor, and basically an individual investor is eligible for this. Companies, other institutions are not. So my final slide before I hand over to Whitney, where are we right now with this? So the tax relief is live now. It's in law, it can be used. We haven't seen any formal deals actually happen yet, but we know a number are in the works. And so we think it's really important to see this relief used so that other people can understand how it works and the knowledge about it can be spread even further. So at Big Society Capital, as well as the Cabinet Office and many other organisations, we're really keen to see how this can work for you. So actually, just a quick plug for Neil Pearson, who's down there, is a lawyer who has a lot of expertise in venture capital schemes and also social investment tax relief, has been engaged by Big Society Capital to help organisations and investors figure out how they can develop this further. So please do contact him as well as us if you have any further ideas. The second stage, just to mention, is the next stage brief, how do we build a broader relief. Treasury's currently got a consultation out at the moment which asks 2 questions. Will it make a bigger size? And will you allow funds, individuals to invest in funds through social investment tax relief? We're still waiting to hear the responses of that. So we really hope that we get a positive response from Treasury and this relief can get even bigger.